Aloha, everybody. We're going to make this one quick. The SPY continues its melt up. The DIA continues its melt up. The QQQ continues its melt up. But the IWM just will not catch a bid with the other indices. The narrowness of this rally continues to concern me. I am not going to fight it. But as we move further and further closer to September, I get more and more worried that any kind of sell-off might actually be quite violent, which I'm okay with, but there's some complacency that's starting to take shape out there, and I just want to caution everybody against it because the market kind of reminds me of that cliffhanger game on the Price is Right, where the man climbs the mountain and eventually he tips over the mountain and falls over. Now, once again, I only expect a sell-off similar to these sell-offs, but I'm pretty sure this V-shaped rally is going to end the same way they always do. And if you're looking for a point for it to end its uptrend, I suggest using the reverse Fibonacci, the Fibonacci extensions. 161 is at 448. Since we've already hit the 127, that is your next area of resistance. Lines up with that 3 ATR. I also like using the Fibonacci projections. And if we take it from this swing low to this swing high to this swing low, we can get that 100, and it's only slightly above where we're at there, excuse me. Holy moly. We are actually at the 100 Fibonacci projection level. So this is it. I only think that we'll probably be able to get to 448.50 before reversing course. I could be wrong. If I am wrong, hell, we could go all the way up here to this 161 line, which is not drawn here, but it's clearly at 460. So that could be a resistance point. And if we do that, it's just going to be big caps. Your focus has got to be big caps. It's all about big caps. I don't see that changing anytime soon. And until we see the IWM to the SPY or IWM to the QQQ ratio flip and that index starts leading, it's going to continue to be a big cap only focus market. And unfortunately, my end-of-day methodology does not focus. And that's the bread and butter big wave trading. That's where I made the most money in my career, was with my end-of-day swings. It focuses on small cap, mid caps. As long as this is the case, my time frame of priority will be intraday, trading small caps or the big caps with news that, like UPST, option change. Whenever something has a massive news event, this is where I want to focus. But for now, it's intraday. Quarterly and long-term portfolios obviously focus on the big caps, and they're doing fine. But even those, my quarterly portfolio is not keeping pace. One's beating the market, the other one's keeping pace, but I got one lagging. And that's not usually the case versus a market during an uptrend. During a downtrend, sure, they're more volatile. They're going to lose more normally during pullbacks. But during uptrends, these portfolios have a long-term track record of destroying the overall market. So the past 2 quarters, the mere fact that the market melts up, it just goes to show that there's just a really tough time for most swing traders out there. And for me, I don't plan on really getting heavily invested or swinging for the fences on any new long position until either small caps take the lead, the bifurcation in this market ends, which, by the way, the QQQ would be up 0.5 one day, the IWM down 0.5, then the IWM be up 0.5 and the QQQ down 0.5 the next day. That's got to end. Until that ends, it's going to be a tough go. Got to see better seasonality or a major flush in the market. I get a flush in the market, I'll be more than happy to scoop up some deals. But until any of those situations happen, it's going to be a hit and miss on the end-of-day swing side. Now, that being said, it isn't all miss. We've had a couple of really nice setups that have worked well, but they're just too few and far between. But on that note, let's go ahead and take a look at the one swing trade idea that I have for everybody coming into this weekend. I want to remind everybody, doesn't mean it's going to work. Could easily fail. That's why we have stops. I lose a lot. Take 100 shots. Could lose on half of them. Win on half of them. But the losers are so small that I maintain all of that hard-earned capital that I'm able to put it into these stocks that are winning. Am I getting my full 3-to-1, 4-to-1 on the winners to the losers? No. But I am getting about 1-to-1, 2-to-1. And that will sustain, even though it churns the portfolio a little bit on the end-of-day side, it sustains the portfolio So whenever I get these great signals, then I can push 10, 20, 30, 50, 100% of my portfolio into these good signals in better market environments. And before we get to the new long position, let me show you what I'm talking about. So as some of you might know from just tracking any of the social media posts that I do, which I don't do a whole lot of, just don't have time, and or these videos, EVC has been a great winner. Now, EVC wasn't perfect, wasn't a great signal, but it was really good. Moving averages were stacked short term, pocket pivot point signal, volume truncation of all the previous volume bars on this chart, max green bop. There was red in the chart. It's a lower price stock. Small caps aren't in favor. Can't load the boat on it. That being said, EVC is perfect. This is how they're supposed to act. This is how they're supposed to act when I get good signals. 78% return in 3 months, under 3 months. I'll take it every day. Every day I'll take a setup like that. Unfortunately, we don't get a whole lot of setups like that. Instead, III was a recent long signal that's worked. This was the initial long signal. I got long, got shaken out on this day, but on a closing basis, it remained true on an end-of-day basis. I list my sell signals on an end-of-day basis because I have some members that trade without stops and only on an end-of-day basis. Not what I recommend. 549 close is above 545, so I kept tracking it. But the next day, boom. Look at that volume surge. Look at the volume truncation in your middle window. Look at the max green bop. Nice hammer, candle over candle, right above the 50. And that volume truncation, by the way, took out all the volume bars, going back all the way to 2018. Very good signal. Could we load up on it? No. Big caps are not in favor right now. Neither EVC or III were big caps. Plus, we keep having this happen. Back in the day, I would get a signal like this. First volume truncation, max green bop. Second volume truncation, max green bop. Pocket pivot point signals on both days. You could load the boat in this name, in this signal. And at first, it starts to work, but then there's a pullback. And it actually bottoms out exactly at the price. I almost got completely shaken out of this name at the time whenever it retested that 273 level. Now, we've now learning that we need to rebuy back. So the next day, that hammer candle, candle over candle, should have rebought. Because what happened in FRBK is what should have happened immediately after that signal. It just took some time. They decided to shake us out before getting it going. Well, the same thing happened with III. Going back, we got that really good signal here. Everything is looking good, but then there's that little shakeout signal. Knocked me out of another half. The next day, candle over candle. I've got to learn to just buy that first hammer on my best signals back. It's something that I'm working on. I get so focused everywhere else that I forget to do that sometimes. Like on this day, I probably forgot that III was one of my top signals, and I just avoided it. The whole point of this exercise is that I'm trying to show you what a great signal would look like would be that signal with green bop or max green bop the entire way, no tall red volume bars, and a pocket pivot point signal on that actual day. That didn't happen with the proper moving average stacks. I bring all this up because the new long signal that I'm taking on Monday, if it triggers, is PLTR. Now, is the PLTR volume surge from Friday a volume truncation? No. Is there a pocket pivot point signal? No. Is there an increase in bop? Yes. Did it increase the max green bop? No. That being said, it's a solid signal. But more importantly, it's a big cap stock, 46 billion. Look at the sales and earnings growth, pretty solid. Not only that, Kathy Wood has bought millions of shares post-earnings. We also know it's a Wall Street Bets name and has a short float. Put all that together, PLTR is worth taking for me. PLTR has a hammer candle over candle off the 50 and 200 SMAs. They're not properly aligned. On top of that, let's see if I don't destroy these charts. Oh, I actually did not know this. This is very good. The 5, 10, and 20 are all properly stacked with the moving averages all heading in the right direction. That's excellent. So it's not the greatest signal, but it's a solid signal. And then this is how I'm playing it. The high on Friday was 25.10. I am not going to get long unless the stock trades at 25.11. My good to cancel buy stop will be at 25.11. I give every cent limit offset. So I'm going to add 25 cents to that. That should be what? 36. So 25.36 will be my limit. 25.11 will be my stop. My stop hits at 25.11. As long as it doesn't explode through 25.36, I'll get filled anywhere between 25.11 and 25.36. If I do, whatever Monday's low day is, you can put a stop there. You can then put a second stop here and then a final stop here. Or you could get long and then put one and only final stop right here. It's completely up to you. 100% up to you. I will be using 3 stops or 2 stops just because I want to keep my risk low and wait for everything to be lined up and push it. These are all just trades for me. But it's a good big cap setup. So how am I going to calculate my size? Well, I'm only willing to risk 1% of my account capital on this trade. Not 2R, not 5R, not 10R, which I will do in better markets. It's just a 1R trade. 25.11 minus 23.57. I get that total. I divide it into 1% of my end-of-day account capital. That will be my share size, and that will be my trade on PLTR. I want to show you one other thing that makes PLTR different than the other 2 stocks that I reviewed, and then we'll just go ahead and end this video lesson. So this is the daily chart of PLTR. If you look down here, you'll see it's done a slingshot move with the TTM trend momentum, and we're squeezing higher. But this signal is not currently under a tight or medium squeeze. It's in a loose squeeze. At least it's firing out of it. Now, I want you to compare that to what I looked like on the day we went long. Slingshot developing, medium to a tight squeeze. EVC. When we went long. Ignore this dot. Telechart version 20 does this. Tight squeeze, slingshot. III and EVC both had those tight squeezes. PLTR does not. Does that mean it's going to fail? No. Like I said, it's resolved out of it. However, anything can fail. That's why we have stops. And that's how I'm going to operate with PLTR. It either works immediately for me, or I cut my losses, sit back, and wait for the next setup. And that's your new trade idea going into the new week. All right, everyone. Thanks for watching. I love you all. I'll see you next weekend.